Apple hitting another record high today, and according to our data team at CNBC, it is the most overbought company right now in the S&P 500 with a relative strength index, RSI, something Josh talks about all the time, of 92. It's posted 25 all-time closing highs so far this year. The question is, Josh, if that's something that you look at and tell our viewers to pay attention to in the way we should think about what to do with stocks, what do I do with that?
The message of Apple is whenever Warren Buffett is selling something, you want to be buying with both hands. JK, love you, Warren. All right, what's going on here is absolutely remarkable. They obviously had a product cycle this year with the new phone. Did not get the critics to be blown away by any of the stuff they did. They're slowly rolling out AI features. They put like this image playground app on my phone yesterday. Fine, I guess I'll try it. The iOS 18 refresh was a disaster. I heard the All-In guys trashing that last week. It really just hasn't been a great year for headlines at Apple. But the fundamentals remain so powerful. I think it was enough for this stock to continue to be accumulated. It also doesn't hurt that we're shattering every record on the books for ETF inflows. Apple's in every ETF. It's in the dividend ETF. It's in the shareholder yield ETF, buyback ETF. They're a leader in CapEx. They're a leader in R&D. It's in the tech ETF. It's in every index. Dow, S&P, NASDAQ, XLK. So when you have money pouring into ETFs, and this is the largest or second largest holding throughout the course of the year, plus the buyback, it's not crazy to understand why this thing has been melting up. I don't think at a 92 RSI, it's a great purchase. So I'm not adding to it, but would I sell it with a gun to my head? I probably still wouldn't. So I think a lot of people are where I am with this stock, and that's just what it is.
So you read it more of a potential bad sign of getting in or buying more, but not necessarily a bad sign that you need to worry about it turning down because it's so overbought.
If you own it for the last, I'm in this stock literally forever. I can't even tell you what price it would have to get to for me to feel it. So I wouldn't be shocked if we saw a 10% correction in Apple to start off the year as money rotates. Keep in mind, the RIA channel is $7 trillion. Do you know what RIAs do in January? Okay, they rebalance. Any form of rebalancing at any large wealth management organization is going to involve selling Apple. You have to understand that. If you don't understand that, you don't work on Wall Street, you don't belong here. So 100% you're going to see selling come out in this name, but how extreme is that selling really going to be? Are people walking away from the stock? Absolutely not. So you have to be willing to endure that correction if and when it happens if you're going to be long this name. And most people are.
Apple Incorporated and Nvidia Corporation have decided to join forces, igniting a technological synergy that promises to reshape the landscape of large language models, LLMs. This collaboration has sent ripples through the stock market, capturing the attention of investors and tech enthusiasts alike. You may be wondering, what could possibly bring these two titans with a combined market value nearing a staggering $7 trillion to the same table? At the heart of this union is Apple's cutting-edge Recurrent Drafter, ReDrafter technique, now intertwined with Nvidia's powerful TensorRT-LLM. This strategic move hints at an ambitious goal to revolutionize text generation speeds while reducing latency and power consumption. Are these giants about to redefine the future of AI and machine learning? Welcome back, everyone, to Investocracy.
I saw you guys talking about Apple being so overbought. Stock's been up, and I'm up a lot in it. What are we doing about it? What should we do about it?
Yeah, well, I think that there are a couple of important factors. One is, what's the tax hit? And many of our clients are taxable, most. They care about paying capital gains. stocks like Apple, it doesn't matter where we bought it. It's all a big gain right now. So to the extent that people say, oh, we thought it was a 4% position and now it's a 5.5%. I understand the rebalancing point that Josh brought up, but also there is the tax hit. And I honestly think that since most people are underweight these names, they are underweight Apple, and the idea now to continue to be underweight is less attractive because the rest of the market has done so little for people.
As stories go, the collaboration between Apple Inc. and Nvidia Corporation is one for the books. Imagine two superheroes combining superpowers. Apple, with its innovative ReDrafter technique, and Nvidia, harnessing it within the mighty TensorRT-LLM, forming an alliance that promises not only excitement, but tangible advancements in LLM performance. One might chuckle at the idea that tech behemoths need help generating text faster. Still, with a 2.7 times increase in token generation speed, it's clear they're not just reinventing the wheel, they're turning it into a rocket. The original purpose of Apple's ReDrafter, which ingeniously combines beam search and dynamic tree attention, was to enhance LLM performance. Now, with Nvidia's TensorRT-LLM integration, it leaps forward by handling complex models with newfound efficiency. Imagine decoding tweets before they're even posted. Well, maybe not that fast, but our point remains. Apple and Nvidia are serious about pushing boundaries, as evidenced by their promising benchmarking results, showcasing reduced latency and computational costs, with Apple recently surpassing analyst expectations with $94.9 billion in fourth-quarter revenue and Nvidia reporting an impressive 94% increase in third-quarter earnings. These companies exemplify momentum and potential seemingly as limitless as the universe they aspire to decode. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
It's an incredible run, but it's not 92.
No.
But how do I think about the types of overbought stocks and what I want to do with them as we approach the end of the year and make the turn?
Well, as you know, I sold Apple because I made 40% in 4 months' time, and I didn't think, and I still don't think, that this version of the iPhone is going to be the super cycle from AI. I definitely think in the out years it will be, but next year I think it might struggle, and I think it's ahead of itself, and I took some gains. But what I did do as a portfolio manager, since I'm underweight, a 7% weighting in the S&P 500, I made Amazon huge. It's a huge position, my largest by far, so that if it does participate, if it does outperform, I'm not going to get hit by being quote unquote short Apple because I don't own any Apple against my bench. So it's a little technical, but quite frankly, I like Apple. I mean, Amazon much better than Apple because I think there's a lot of ways that they can win. It's retail, they're taking share. It's AWS, we all know about the cloud, and it's accelerating. Advertising never gets talked about. They have huge amount of cash. I think they're going to announce some sort of a dividend or a bigger buyback. And yeah, it's expensive at 35 times, but it's at 14 times EBITDA, and historically it's traded at 17 to 18 times. And so I still think there's upside. I still want to own the behemoth in the discretionary sector.
The tech community is buzzing. Discussions abound on how reducing latency and increasing generation speed could improve user experiences across myriad applications. Engineers at Apple suggest this could lead to significant drops in computational expenses. In a market where time and electricity are money, such advancements translate into substantial savings on infrastructural costs, a notable win in any investor's playbook. With Apple and Nvidia pooling their resources, we find ourselves standing on the precipice of a new era for LLM technologies. This venture epitomizes not just technological advancement, but also a growing trend of symbiotic collaborations between industry leaders. As each incorporates the other's strength, both companies' investors and users could stand to benefit in ways they never imagined, especially in a stock market that values innovation and fiscal performance alike. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So I think we're wrestling with a couple of things. We have this transition to Blackwell, And so your product Hopper, which is still driving the majority of revenues, is starting to slow down, as you would expect to see. And there's a lot of enthusiasm now for custom silicon or ASICs, as we've seen with Broadcom and Marvell. I think those things are weighing on the stock. I still think when you think about 2025 and AI, the story is Blackwell, the product cycle that NVIDIA has. I think they're going to have a huge second half of the year. And I think we do have these transitional issues as we're moving there. But I think the stock is very attractive at this level. I'm not going to say absolute bottom because it's volatile, but it's very attractive at this level. I think you're trading at a much lower multiple than some of the AI peers. And I really believe that they actually gain share versus custom silicon in 2025. I'm very excited for this custom silicon trend, but I still think NVIDIA can gain share relative to that in 2025 and has a very strong product cycle. We think the stock trades well north of 150 as we sort of move into that back half.
As Apple Incorporated and Nvidia Corporation push the envelope with their collaborative innovation, the implications for the stock market are immense. The enhanced capabilities of LLMs through improved text generation speeds promise a new horizon for AI applications, allowing these tech giants to gain an even more substantial edge in technological dominance. If the past is any indicator, this collaboration has set the stage for sustained growth and profitability. Current market forecasts suggest significant upward potential in the stocks of both Apple and Nvidia, aligning with the momentum of their innovative synergy. Apple's entrenched position as the most valuable company globally, combined with Nvidia's rapid revenue growth, paints an optimistic picture for investors. The integration of ReDrafter with TensorRT-LLM may prove to be an astute decision, reinforcing their shared commitment to innovation and leadership in AI advancement. So, the real question is, do you see yourself riding the wave of this collaboration? Share your thoughts on whether this strategic merger entices you to invest in these technological powerhouses as they forge a path toward a potentially groundbreaking future in AI and machine learning. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.